Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, May 16th, and we got a lot of economic news to cover today, so we're going to jump into it. We're going to start off with the weekly jobless claims that comes out every Thursday. And last week we had, remember, a drop down quite a bit down to about 328, so it's a nice little range last week, and the forecast was to be kind of maintain that range, so that 330. And the final number came in at 360. So we had a pretty big spike in the weekly jobless claims, which is kind of creating a little unrest in the markets. As it last couple of weeks, it was kind of creeping down the 320, 330 range, and then we got a spike up to the 360 range, which we hadn't seen in probably in a little while, a few months. Then the next item here to note is the core CPI. This is where you strip out the food and energy that creates the volatility. So it's not the headline, but this is the actual core, and this is what the Fed actually watches, and most economists will watch because it just creates so much volatility, so you can't really have good readings on the headline number. So we had a 0.1 growth for inflation. This is obviously inflation on the consumer level. So 1.1% growth in back in May. Now the projection was to increase a little bit up to 0.2%, and it came in at 0.1%. So very modest. Still no issues with the inflation level. We're still very, very low, less than 2%. So some inflation is good, but we're showing very little inflation as of right now. Next item to note is the housing starts. So we had a 1.02 million housing starts back in March, excuse me, and then so the forecast was pull back a little bit to about 965, and it pulled back quite a bit to 853. So quite a bit of a pullback on the housing starts. So not too good of news in that sector there, primarily because obviously we want to see more construction building, and we need the inventory. As if you're out looking for homes, you see how slim the pickings are. So now we have the building permits, the other side, which can help project the future growth of these housing starts. So we have March reporting showed 890,000 building permits applied. And now we figured that was going to improve a little bit, and it jumped up to 1.02. So that 1.02 million we had from house starts back in March, now we got in permits. So we can kind of compensate for the building permits to improve those numbers going forward. So we got obviously more people going to be, or more builders will be building here. And we kind of noticed that earlier in the week where we saw the home builders index, which was their confidence level, that we saw some improvement in their confidence level, where we did see some decline in there, so we had to kind of translate into building permits as well. Last but not least, we got the Philly Fed. This is the manufacturing in the Philadelphia region. If you recall, we've been seeing some negative numbers of late, so let's see what Philadelphia shows. We had a 1.3 for the month of April. Projection was to grow a little bit, about 2.0. And remember, zero is basically anything above that is basically expansion, so it's very, very slim, and anything below that is showing contraction, and we end up showing contraction. So a negative number, 5.2. So obviously not good numbers here. We're going to jump over this, see what the stock market is doing. Right now, the stock market's a little mixed. Everything's pretty much down, or everything's up except for S&P's down. Down a little bit. So, but it's very light trading. You're looking at less than 1% on either side, negative or percent on trading wise. That's been going on there. Then we'll go over to the bond market and see what's going on here. So as you can see, yesterday we have kind of a star effect. So we tested the bottom yesterday, and when we pulled back, today we jumped up and started the day off about 23 basis points higher. And then we got another 30 basis points on top of that. So we're showing some growth today. What that translates is that we have about 53 basis points from where we left off yesterday. And what that translates is that no point loan yesterday now saves you about half a point. So it should be a half a point improvement in your pricing on the interest rates. All right. So thanks for watching, folks. I hope you guys have a great day. We'll see you guys tomorrow. And again, this week was volatile, so we had a lot of seesaws, and so it looks like we can hopefully make up some ground here. Have a great day, and see you tomorrow.